Hey there, everyone. Today on the Final Bar, continued strength for stocks going into this Thanksgiving holiday. The S&P and the Nasdaq finishing higher. The VIX pushing down right to that 13 level, actually just below 13. This is indeed a low volatility bull market phase. We'll do a special segment, banking on breadth. What would we need to see to turn bearish? Ladies and gentlemen, this is the Final Bar. Hey there, everyone. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a cloudy Redmond, Washington. Thanks for joining us every weekday after the close, and especially now, right before this Thanksgiving holiday, to focus on how the markets have evolved and apply the lessons of the great technical analysts that have come before, people like John Murphy, Martin Pring, and others that we have as part of the StockCharts family posting content every week, and many others. Let's think about how we can apply those long-term, those timeless lessons of market participation and trend and behavioral analysis to the current market environment. A lot of stocks have had an incredible November. A lot of stocks now testing key resistance. We're going to look at a chart like NVIDIA pulling back a bit after a decent earnings release, but just not able to get above that key resistance level. That, I would argue, is the threat for this market going forward. You have stocks that are unable to get above resistance. S&P 4600 looming pretty large above current levels. Let's get to our market recap and see how the charts actually played out through the course of the day. Today, here on Wednesday afternoon, we are going to start with a poll question. We asked you simply, where will Bitcoin be at the end of this year, December 31st, 2023? Higher or lower than current levels? About 2 out of every 3 of you said higher than current levels, which means, Bitcoin sort of in a bullish phase here. I would tend to agree, just based purely on the trend that we've seen to date. Let's look at a chart of Bitcoin and just see how things have played out here. Now, I feel like there was a time earlier in 2023 when Bitcoin was kind of like a low volatility asset, which is completely not how I would normally describe it. Cryptocurrencies, by definition, just by their general structure and the participation, the participants, tends to be a little higher volatility. But you're seeing overall here recently, particularly after the breakout here in October, that the momentum conditions have improved, right? Look at the momentum in August and September with the RSI remaining below 60, often becoming oversold. Compare that to where we're at now with the RSI pushing above 70, even above 80 here on this push higher, and not really getting below 60, indeed, or not getting below 40. In fact, not getting much below 50 here recently. You have a lot of these big up and down moves, but overall the trend has been positive. And I think what's encouraging about a chart like this is after a breakthrough resistance where we saw here when Bitcoin got above 31,000, the question is, do we get that follow through, right? Do we get additional demand or additional support for further upside? And I would argue we've certainly had that. Over the last couple of weeks, you can see Bitcoin's kind of sideways, kind of choppy between, we'll call it 35,000 on the lower end, maybe 38,000 on the upper end. So, again, you can kind of still keep pushing those stops higher. You can see the pattern of higher highs and higher lows. Getting above 38,000 would complete and, continue this bullish phase that we've seen. Overall, the momentum is pretty strong here. What you're looking for, and one of the key signals would be kind of what we had here in February, higher highs on lower momentum. We're not really getting that yet, only because we haven't made a new high here. If we would break above 38,000, the momentum would be down here. That would be a potential cause for concern. But overall, I would agree. The next month and a half, getting us to the end of December, I would say more likely than not, we're higher than we are at this current level. Thanks again for voting in that poll. The way to get to our polls, by the way, follow us on all the socials. So Twitter, X, Facebook, wherever you follow things socially. You can find StockCharts TV there. And of course, make sure you subscribe to our YouTube channel. That's the best way to do it. Let's look at the market recap or look at the market overview page here on your dashboard. You can see, as I mentioned in the introduction, nice update, kind of a continued upswing for risk assets. The S&P 500 closing above 4550. The Nasdaq Composite up as well. Both of these up about 0.4, 0.5%. So not a raging update, but just kind of a nice upward trend. If you ask me, generally speaking, the day before a holiday, what tends to happen to stocks, the two things I would say would be up a little bit on lighter volume. That's kind of what we found today. So no real surprises in terms of the trajectory of these markets. Mid caps and small caps all participating as well. I would say the big story on this front page, besides the fact that stocks keep going higher, is the VIX is very, very low. We'll look at the chart of the VIX here in a chart or two and show how the VIX is actually down below 13 We're now getting to the lower end of the range that we've experienced here in 2023. Certainly, by any definition, a low volatility bullish phase here in November of 2023. Looking at interest rates, not a huge swing in rates, to be honest with you. The long end came down a bit to around 455. The 5-year point came up slightly to around 444, and the 10-year yield here around 442, and that's pretty much where we were yesterday. Can't stress enough, if you missed my conversation yesterday with Marianne Bartels of Sanctuary Wealth, really thoughtful comments. She's a fantastic strategist, ran the team at Merrill Lynch for a number of years, and really knows the markets, and a great combination of the different hats you need to wear: macroeconomic, quantitative, fundamental, technical. Her comments on outlook for bonds, particularly stronger bond prices, weaker yields, what that means for growth stocks, you can't miss that one. So I'd encourage you, if you did not watch the show yesterday, make sure you check out my interview with Marianne Bartels. Bond prices up about 1/3% using the TLT. The dollar up about 1/3% as well. So again, no real significant moves anywhere here, which again, not much of a surprise on a holiday session. The DBC, a broad commodity ETF, down about 0.9%. Gold and silver prices down slightly as well. Crude oil prices came off. Natural gas, the only one on this top 8 ETFs in the commodity space that was in the green. Everything else kind of in the red. The energy sector not having a great time. Out of all the sectors and what they're doing in November, probably the least impressive, I would say, would be the energy sector. And you have stocks like Haliburton and others that have just really gotten up to significant resistance and failed. And now just pulling back. Not horrible charts, just not very good charts and okay charts at a time when most charts are actually quite strong. In terms of the strength of the day, I mean, I think the story has to be cryptocurrencies. Bitcoin up 5% today. Ether prices up over 7%. This is pushing Bitcoin nearer and nearer to that 38,000 level. We saw the chart of Bitcoin a little bit ago, but again, a nice up down. This is after yesterday's down move, so we're recovering a lot of those losses from yesterday. But overall, again, when you look at what sort of put your finger in the air and think about where the winds are blowing, crypto is going higher. Certainly a part of the story here going into the Thanksgiving holiday. In terms of the 11 S&P sectors, to be honest with you, kind of mixed here. At the top, we have communication services, a fairly growthy offensive sector, up 0.8%. Staples, a fairly defensive sector, number 2, up 0.7%. Healthcare up about 0.5%. Utilities as well. So you got a mix of growth, defense, and a bunch of things at the top. On the bottom, energy, the only sector down, and just down slightly, just a little bit below unchanged. Materials and industrials, again, just slightly higher from where we were yesterday. Let's go to the daily chart of the S&P 500. As I mentioned, we're going to do a segment later in today's show called Banking on Breadth. We're going to dig a little bit into some of the breadth indicators, some of the ones that I think are very supportive of this bullish phase, some that I would argue are the ones you want to watch to identify any sort of downturn in the markets. Not that we're seeing that today. We're seeing a lot of continued strength. Gaps are interesting to me. I think they're fascinating because, for me, predicting when a gap is going to occur is super challenging. And I think one of the books by W.D. Gann, or one of those, I forget who it was, but someone in the beginning talked about sort of their diatribe on why they don't invest in stocks. And one of the big reasons was because of the company risk or the earnings risk, right? These gaps that happen because between one day's close and the next day's open, a lot can happen. You don't really get those kind of gaps in commodities and in currencies as much, and certainly not as frequently. In equities, every day, I feel like we're dealing with some gap up and down because of earnings. You have a lot of resets in valuation from one day to the next because of the amount of news flow that can drive short-term price action. And I would say with currencies and commodities, it's more of a technical discipline, which is not surprising. A lot of the technical indicators we use, like RSI, were created using the commodity prices or commodities markets. But with the gap here on the S&P 500, with the gap in the QQQ, both of these a push higher. But then look at what happened after. This was on the CPI number that we had last Tuesday. That was the big gap higher, big upthrust. But then look at additional buyers coming in. So closer and closer we get to that 4,600 level. And again, if you ask me, are we likely to break it or not? I would say chances are, I would assume yes, given the strength that we've seen here and the fact that the markets are overbought tells me two things. Number one, in the short term, you'd expect a bit of a pullback. So a pullback from 4,600, huge resistance, the high for the year as we're overbought, I think makes a ton of sense from a technical perspective. Indeed, I would be more surprised if we did not have some sort of pullback, at least some sort of little pullback from this resistance level. But then it's going to be all about that next move, right? Do we make that higher low? Do we reset and push higher? Stocks like NVIDIA powering through resistance. That's the bull case through the end of the year, through the next 6 weeks. First things first, we have to get above 4,600. That's the ceiling in the market right now. We call the show the final bar because you're looking at the final bar looking to the left. That's the level of resistance. We've arrived. So I think going into next week, coming out of the Thanksgiving holiday, that's certainly where I will be focused. Now, when you think about the QQQ, a little bit different. I actually just posted a video to my YouTube channel called Market Misbehavior just yesterday, dealing with the Qs and 4 potential paths, thinking about just different scenarios, very bullish, very bearish, and something in between. With the QQQ, you have just this beautiful gap here. So both the S&P and the QQQ have this gap. We had a number of questions recently on price gaps, and I tend to think of them as pretty important support or resistance levels. So the fact that this gap from last week, right around 380 on the QQQ, lines up with the high from September, like the end of August, early September, before we made that new low. I think that's the level. We hold 380 on any sort of pullback, and this is nothing but just a constructive chart. We haven't had a big pullback off of the October low yet, so we're overdue, arguably, for one. The question is, where does that higher low come in? And I would be focusing on that 380 level as a potential area of support. Now, going to the VIX, we talked about volatility, and this is a low volatility environment. You know, the VIX is interesting because what it's telling you now is that we're back to kind of that slow and steady upswing, right? Last time we were down to these levels was actually in September, which was a brief market peak before we rolled over. This is sort of a weird anomaly where you saw the volatility incredibly low just as we sort of popped up there. But you know, if you look at the sustained advances we had in June and July, if you go back on the chart to 2021, that's the last time we talked about a sustained bull advance with the VIX down in this sort of 13 handle kind of range. We're very, very close to undercutting the VIX, making a new low for the VIX for 2023. And I think that VIX remaining low is part of the bull thesis as well, which means this is pretty simple. Look for the VIX to turn higher. Look for high yield spreads to widen. Neither of those things are happening right now toward the end of November. Those are some of the warning signs that could come out as we go into December. For now, it's telling you sort of long and strong. Volatility is low. Market upside is very possible. Let's talk about some sectors, some themes, just some individual names to round out our market recap here. I mentioned the energy sector, and I'm looking at the XLE. You know, again, you have a number of things that are pretty clear. You have this bearish momentum divergence August into September, higher highs in price, lower peaks in momentum. And it's not just the XLE, by the way. I mean, look at a chart like Haliburton. You have this really clear bullish momentum divergence. This one's even more ideal. Higher highs as we're basically testing a key resistance level, lower peaks in momentum. We're overbought on the first one. We're not overbought on the second one. Really suggested this upswing off of the May low was exhausted. Now Haliburton, it's not a horrible chart. It's not an end of the world. This is, you know, a miserable chart. It's kind of testing support still from August and October. But just the problem is this is at a time when most stocks and certainly the most important stocks, the growth leadership is really starting to move to the upside. Charts like NVIDIA are testing resistance. They're not testing support. So something like the XLE down at its 200-day moving average, which is kind of sloping downwards a little bit, that's what's going to cause you to underperform. So given the weakness in crude oil prices, energy stocks are really struggling. And there are some random names that are outliers, something like an AM, Antero, Midstream, you know, in a nice uptrend. The average energy stock is kind of at the lower end of the range. And I would say this is the type of space you want to avoid until you see an improvement. Energy stocks are a play on crude oil. Until you see an improvement in crude oil prices, I would say probably you want to hold off, right? You want to wait for an improvement. Now, when we think about this market, we're going to talk about breadth again later in today's show, but you know, a lot of stocks are sort of doing the same things the S&P is, which is basically testing that big resistance level, right? Sometimes you have short-term resistance, short-term support, and you sort of think about what that might mean. Sometimes and occasionally you have sort of that monster resistance level where it sort of feels like the market is getting to the end of one chapter, and the question is, do we begin this next chapter, and what does that new chapter look like? A new bull phase going into the beginning of 2024, which some of my recent guests have been proposing. You need to have names like Alphabet making new highs. I think no doubt, right? There's no way I think that the market goes materially higher from current levels into next year without an Alphabet improving from what we've seen so far. Alphabet still has an RSI around 63, so we're getting above 60. That's encouraging. We haven't gotten above resistance around 140. And I'm not saying it won't happen. I think it's actually quite likely it will happen, but it just hasn't happened yet. And so the bull case needs to see more and more stocks making new 52-week highs. That's a preview of what we're going to talk about in the breadth segment, which means Alphabet needs to get above that resistance. It means Netflix It needs to get above the July high, which is around 480, we'll call it. We're kind of right there, right? Do we get enough upside momentum to push above 500, if not a little bit further? Charts like Spotify in the technology sector also testing their July highs. So while we've seen an impressive leadership from names like Microsoft, I still see a lot of stocks that are having a nice run, but are up against resistance. And I think these kind of names, a Royal Caribbean, some of the other travel and tourism names, are testing significant highs from earlier this year. Bullish markets have stocks breaking out and additional buyers willing to come in and want to pay more than $110 a share for Royal Caribbean because they see the upside potential going into next year of much higher upside. And I think that is the next sort of check I'd want to make. But again, there's so many names like this, and with the S&P as well, getting to a key resistance level in Royal Caribbean's case, right around $110 a share. We're overbought as we test resistance. For me, that general playbook means we probably pull back from resistance, and then you wait to see if we see additional upswing going into the end of the year. Have to talk about NVIDIA, of course. This is one of the many names we could highlight, sort of testing a key resistance level. $500 a share is a big round number. Also happens to be the high from August. We've been down quite a bit from there, about 20% lower. Here at the end of October, we've now gone a 100% retracement back up to those highs. Not a bad earnings report this week, but down about 2.5% today. So you're not getting that upside follow through yet in a chart like NVIDIA. Semiconductors are a key group. Call that a bellwether group. Right? When semiconductors are doing well, the markets probably are doing okay because these are the backbone of the modern economy. NVIDIA testing resistance, overbought. We're now pulling back a little bit. Again, it's all about timing that pullback. I wouldn't be surprised if we make a higher low and resume that uptrend, but 500 is the alert that I have set on NVIDIA. I would encourage you to do something like that as well. Tesla is one more that we'll do to round it off here. And when you're looking at Tesla, again, I get a lot of people that are so bullish, they're telling me everything's bullish. And just to tap the brakes on that sentiment just a bit, let's keep a good focus on what the charts are actually telling us. I think it's very easy in this kind of environment to say, all right, it's a bull market, everything's going up. Just because the market trend model that I run is bullish, that does not mean all stocks are working. We highlighted energy, that's not there yet. We highlighted NVIDIA, that's testing resistance. It's not in the all clear yet. Charts like Tesla are not proven yet. As much as you've had a nice run off the October lows, again, don't get me wrong, I think that's an impressive rally in a short-term time frame, but look at what the chart is really telling you. My checklist involves looking at a bunch of different technical disciplines. I'm seeing that we're still below a downward sloping trend line. We're actually back below the 50-day moving average today. The RSI has stalled out around 60. This is still a bearish trend based on my straightforward use of the technical toolkit. Getting above 260, getting above the trend line, getting back above the 50-day moving average, the RSI getting above 60, those are the things that make me check the list off and say, yes, this is a bullish chart. I would focus on names that are proving their strength and not the ones that still have a lot left to prove. I think Tesla is still one of those charts. That's our market recap for today. We're going to come back here in a moment and talk about banking on breadth, dig into some of the key breadth charts I think are important to watch going into next week and beyond. Before we do, a couple quick announcements. First off, the mailbag. We are doing a special all mailbag segment on Monday's show. We're actually going to be off of the live broadcast on Monday, but we have a great all mailbag event queued up for you. The mailbag can always use more questions, and they come from people like you. What are you running into as you are trying to use technical analysis to make sense of these markets? Our email is thefinalbar@stockcharts.com. On X, just tag us in a comment @finalbarsctv. On our YouTube channel, of course, drop a comment in the live chat anytime it's open. Put a comment below the video you're watching. And while you're here, don't forget to like and subscribe to our channel. We so appreciate that. Also, to let you know, we have a super important special going on right now for StockCharts members and non-members alike. If you go to stockcharts.com/special, you'll find all the information about our Black Friday week, which will transition into our Cyber Monday special coming up through the beginning of next week. There is no better time to become a new StockCharts member. If you've always thought about some of the capabilities that we've had and really taking the product for a test drive, this is the time to do it. There won't be a better time to do it during the course of the year. If you're a current StockCharts member, if you go to this page, you can actually extend your membership at the low promotional rate today. So go to stockcharts.com/special. There are so many great features to the StockCharts platform, our scans, our alert system, chart styles, premium commentary from people like John Murphy, Martin Pring, and others, all part of a very low cost, and I would argue incredibly undervalued StockCharts memberships. Make sure you go to stockcharts.com/special. Want to continue on with our next segment, banking on breadth. As you know, if you've followed this show for a while, breadth analysis is super central to how we think about the world. And it's all about thinking about participation, right? For me, breadth is all about participation. Looking at the indexes tells you what the high-level market is doing. The market as defined by the S&P or the Nasdaq. Breadth conditions take you underneath the hood, take you behind the scenes at the market behavior, and really think about the stocks that comprise these benchmarks. Breadth analysis is something I look at every day. Part of my weekly routine with my market misbehavior premium members certainly has a breadth component always, because I found it to be so central to understanding the conditions and how they evolve. So let's start with just simple analysis of advanced decline data. And in the short term, I will tell you that advanced decline data basically just aggregates those daily movements, right? Every day we have the advancers versus decliners, stocks closing up, stocks closing down, and we can turn those into cumulative metrics tracking advanced decline data over time. And it makes sense. If the market's going up, you're going to have more stocks closing higher than lower over time. In a downtrend, you're going to have the opposite. What's interesting is, though, even though the S&P is testing a new high for the year, none of these advanced decline lines really are near that. And that really speaks to the dominance of the mega cap trade, still very much what we're talking about here in November of 2023. I would argue that I think an extended bull case, if the markets are going to go materially higher from where they've come already off of the October lows and really off of the COVID lows, I think you need to have stronger breadth conditions, which show you it's not just the mega cap growth leadership, it's everything else starting to participate. And you're seeing that in some cases, but not enough, I think, to be really optimistic about further upside. For example, the large cap S&P's advanced decline line has already broken above the October high. It's above the 50-day moving average, but none of the other breadth lines actually have done so yet. Looking at some of these and seeing through the course of the next couple weeks if we can get to new swing highs there, that's when I would color code them subjectively more of a bullish green and suggest that it's supporting upside from here. Now, that is more of the trend in advanced decline data. I would also point out that something like the McClellan oscillator, when I think about what to consider for conditions today, and maybe in the short term, I'll be looking at this particular chart. This chart is showing you the McClellan oscillator. This basically uses the moving averages. It smooths out the advanced decline data, turns into this proprietary indicator, which essentially says, is the advanced decline data bullish or bearish? And it's an oscillator, so it's really more of a short-term measure of breadth swings to the upside or downside. The McClellan oscillator turned positive at the end of October. And again, this was not after a big run. This is really the first couple days of this upswing. You saw it turn back above the zero level. And that tells you that we're seeing renewed strength short-term in the breadth conditions. The markets, of course, in November have been lights out positive after that signal, as came out in a mailbag or in the live Q&A earlier this week. Bit of a divergence, and if you look back, some of these divergences have been interesting, compelling early warnings of a potential reversal. I'm happy being patient and waiting for that break back below that zero level. We're not there yet. We're not close to that yet. This is a chart I would be watching going into next week. If the S&P does stall out at 4,600, if the S&P does roll over and stocks are unable to break above resistance, the McClellan oscillator most likely would give you a sell signal back below zero. And that's not a long-term sell signal. That would just tell you that pullback that I say is likely off of resistance is kind of in full force. So this is an important chart to watch. I think going into next week, and certainly beyond that, to see if we get that downside validation. Next one I want to show you is, let's say, stocks above key moving averages. And we look at the percent of stocks above their 50-day, 74%. Now, two things that this tells me. Number one, that's pretty bullish, right? Above 50% is bullish, below 50% is bearish. And with either of these measures, that's why I have this horizontal line right at the 50% level. Stocks above their 50-day moving average is more of a short-term breadth indicator. I think of it as kind of like the McClellan oscillator. It's telling you about shorter-term swings up and down. The percent of stocks above their 200-day moving average really is meant to capture more of the longer-term rotation from bullish to bearish phases, from bearish to bullish phases. And just look at some of these rotations. Look at the bearish phase in 2022 and how much time we spent below that 50% line. Look at the bounce higher that we had off of the October lows, how the indicator went above 50% in November and then spent most of the last 12 months really above 50% with some occasional drawdowns in March and in May. Now, we broke back below that 50% level here in September, and that was one of the many things, besides the S&P breaking below its 200-day moving average. I feel totally fine about being a lot more bearish at the October point because I think a lot of the conditions suggested there was a high probability of further downside. It was an astute approach I think, to be defensive or be defensively minded and make sure that you are focusing on, managing risk to the downside. As we know now, the market stopped very quickly, had a V bottom of sorts, and rallied right back above there. So all those negative conditions, the momentum being, or the breadth being very weak in the short term, turned to positive, right? We went down from 10% of stocks above their 50-day to now about 75%. Pretty good swing. Down to around 25% of the S&P members above their 200-day to now over 50%, right around 56% as we're live here on Wednesday the 22nd. So overall, a nice improvement in breadth conditions. This getting above 50% is probably the most bullish characteristic out of the chart that I'm looking at here. I like that strength, and as long as that holds 50%, even if you get some wiggles, some short-term pullbacks, this indicator remaining above 50% tells me that overall the uptrend is persisting because stocks are not failing to hold their 200-day moving average. That's kind of an encouraging sign that we've seen. Look for this indicator getting up to around 85, 90%, because if you look to the left, the percent of stocks above their 50-day getting up to that 90% extreme usually is a tradable top. We're not there yet. We got another 15% of a gain to be said, but that would be sort of the red flag of sorts. You know, when the breadth is so positive, it's actually negative. That's what I would look for on this particular chart. A couple others to mention. Let's see. The bullish percent index is an important one. Now, this gave a really good buy signal at the end of October, beginning of November, really. This indicator is looking at what percent of S&P members are in a bullish point and figure signal versus a bearish point and figure signal. When it goes below 30% and then back above, I found that to be a really compelling signal of often a very significant bottoming point. We did have a quick reversal off of the early October low. We made a new low at the end of October, and early November once again gave a buy signal. And this one, of course, has done very, very nicely with a uptrend through the course of November. At this point, it's pretty bullish, and what you would look for is the opposite, right? You look for the indicator to get above 70% and then back below. The last time that happened was at the end of this run in late July, early August. It went well above 70% and then finally came back below it, and that tells you that uptrend phase that we observed is probably at the end point. So again, tells you there's more upside to be had before this indicator might turn negative. But here's the thing. Look at the Nasdaq's version of this. This is the Nasdaq 100 bullish percent index. As of today, it's actually right dead at 70%. This is actually after going above it about a week ago. So this actually has initiated a sell signal, and depending on what happens Friday into Monday, could actually register a sell signal of its own. Now again, this I found less consistent. There are a lot of noise back here on the left half of the chart. But again, I find in terms of painting a complete mosaic of the breadth conditions, looking for these kind of signals can be very valuable. Last time we got down to 30% and bounced higher was at the end of October. We're now back above 70%. We're really close to a potential sell signal. And this could be a short-term signal, but again, another chart to maybe validate a likely pullback as something like the Nasdaq Composite, the S&P 500 testing significant resistance levels. The last one I just want to show you, and this is actually this one right here, is the stocks making new highs, right? So when we think about going back to our analysis of the chart of the QQQ, the S&P 500, these are stocks or ETFs that are testing resistance. The question is, can they power to new highs and hold those gains? Now, what has to happen for our benchmarks to move higher is you have to have that early leadership that even though the S&P is not to a new swing high yet, you have to have stocks that are probably already doing it. And these are the Microsofts, right? Those early gainers that are already breaking to new highs. So while the S&P is still below its July high, these histograms at the bottom, this is the new highs versus new lows on the New York Stock Exchange. At the very bottom, the new highs and the new lows on the S&P 500. Green bars are the number of new highs every day. Red bars are the number of new lows every day. Look at how few S&P stocks, maybe a couple yesterday, and that was it. For the most part, in the last week, there have been no S&P names making a new 52-week low. That tells you something. There have been plenty of names making new 52-week highs. As a matter of fact, in about a week and a half ago, you had a full 10% of the S&P 500, 50 stocks, making a new 52-week high on the same day. So for the bull case to evolve, right, for the S&P to get above 4,600, I would argue you need more green and continued less red, because that will tell you that more and more stocks are able to power through those resistance levels. So in terms of what could validate the likelihood of the S&P getting to new highs, I would say breadth conditions like this just have to keep building, right? You need to see more and more new highs, or what I would call an expansion in new highs. If you don't get that, then I would be suspect. I would say a break to new highs would be suspect. And even if the S&P breaks to above 4,600, but then the new highs start to slope downwards, that tells you it's less and less names actually in that leadership role, right? We need more Microsofts that are actually breaking to new highs. This could be a very important chart to see whether or not that sustained bull move is really playing out as expected. That is our segment, Banking on Breadth, really focusing on some of the breadth conditions. And again, the way I would summarize it is overall, there's a lot to be impressed with, a lot of strong breadth conditions. There are some indicators I would be watching, like the bullish percent indexes, like the McClellan Oscillator, the new highs and new lows, to see if we can validate further upside or whether we can validate a bit of a pullback as the major indexes test significant resistance levels. With that, we've got to wrap the show, folks, and go to the 3 in 3, 3 charts in 3 minutes that tell the story of this market environment. Here's chart number 1. The story of the markets in November of 2023 continues to be, I would argue, the story of mega cap growth stocks dominating the markets. And again, when you look at the XLC, the communication services sector in the top, the XLK, which is the technology sector in the bottom. These are obviously the two leading sectors year to date, strongest returns, and the gap between these sectors and other sectors, in some ways a stark contrast between the leadership groups and some of the other groups in the market. Both of these sectors, the XLC and the XLK, have had a gap here. That's from last Tuesday, the CPI number, which really reset and really initiated this breakout that we've experienced through the Thanksgiving holiday. I think holding these levels on a breakout is a pretty important level. That means the XLC holding around 69, which was the peak from July, and also this gap here from about a week and a half ago. On the XLK, it's around 180, which again, the July high, that coincides with the gap that we saw here last week. Holding those levels is pretty important. I think that means that there's a bit of a pullback to be had and still be within a fairly consistent bullish phase. Gaps matter, and treating those as support I've often found to be a pretty good approach. So keep an eye on those leadership sectors to see if we can get additional gains. Now, what would tell me that breakout may be unsustainable? It's going to be breadth indicators like the bullish percent index on the Nasdaq 100. It's going to be the McClellan Oscillator breaking back below zero. It's going to be maybe an evaporation of new highs instead of an expansion new highs. I think breadth indicators can be helpful if you're thinking about the likelihood of our major benchmarks moving higher. Think about some of the leadership names like Microsoft and Apple and Amazon, NVIDIA breaking to new swing highs, but you can also aggregate all of those things using breadth measures and look at something like the bullish percent index. Previous times when this BPNDX, which is the Nasdaq 100's bullish percent index, previous times it's gone above 70% and back below, have been a bit of a warning sign indicating a short-term pullback. I'll be interested coming out of the Thanksgiving holiday if we do get further pullback because of that. Finally, let's finish the last show before Thanksgiving, giving thanks for some strong charts out there. I didn't get a chance to talk about things like DraftKings and Adobe, Murphy USA. There are names that just look really good in any environment, but Adobe strikes me as one of those great examples. Just a rally going into July, August, a sideways trend. So it continued to outperform while the S&P was going down, and then breaking out yet again in November and pushing to new swing highs. This is a good chart in any environment, I would argue, but the relative strength is consistently high because it's outperforming when the market's going up, it's outperforming when the market's going down. Owning stocks where this line is going up is the way that you can outperform consistently over longer time frames. Folks, that's a wrap for the show. I want to thank you so much for joining us every weekday after the close for the final bar. It's my mom's birthday, so happy birthday, Mom. And it's also my anniversary, so happy anniversary, honey, coming up this Saturday. Don't forget to like and subscribe to our channel and this video before you leave. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Have a great Thanksgiving holiday. We'll see you next week.